Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the second day of the Precious Metals and Critical Minerals Conference. Our next presentation is from LibertyStream Infrastructure Partners. Please note you may submit questions for the presenter in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Bill McLean. He's the head of investor relations of LibertyStream Infrastructure Partners, which trades on the OTCQB venture market under the symbol VLTLF and on the TSXV under the symbol LIB. Welcome, Bill.
Thank you, John. Thank you to the OTC team for hosting the event. And in particular, thank you to any attendees who have shown up to share some of your valuable time with me. As John mentioned, I'm here with LibertyStream Infrastructure Partners. A bit of a mouthful. The good news is that the business model is actually simpler than the name. And that's my goal by the end of this talk, is to map LibertyStream to one idea in your mind, is to turn a waste stream from the oil and gas industry into a domestic supply of critical minerals. Try to get through this relatively quickly, maybe 20 minutes, and leave a solid 10 minutes for questions at the end. But I'll start by stating that the size of the opportunity that is in front of us is absolutely enormous. In the oil and gas industry, there are hundreds of millions of barrels of lithium-bearing water being pumped to surface every day and simply being thrown away. And our business model is to tap into that waste stream, extract any critical minerals that we can, and in particular, reshore domestic supply in the U.S., North America. Try to emphasize a couple of things as we go through this is we do not drill new wells. We do not build new pipelines. We just borrow dirty water for about an hour, take the lithium and hopefully someday other minerals out, and then we give the water back. So at its core, I would say that as opposed to a mining company, LibertyStream is a technology company. Our core asset is the direct lithium extraction technology, or DLE for short, if you're familiar with that term. And our technology can be bolted onto existing oil and gas water handling infrastructure, often known as produced water or oil field brine. So lithium's been in the headlines recently with the US government looking increasingly at taking strategic stakes in domestic lithium projects. Things like with Lithium Americas converting part of their loan into an equity stake. And that's brought a lot of attention to us because many of these mega projects take billions of dollars and several years to come online, whereas our technology can bolt onto existing infrastructure and start producing in the very near term. Like to walk through sort of the speed of development of our technologies. Not only the speed of development, but the speed of deployment are two integral things that I think set us apart. So as little as 2 years ago, this was just a lab experiment in a 5-liter beaker. It came with a breakthrough in the lab, having developed a selective ion exchange sorbent that was extremely selective for lithium ions, even at low concentrations, which is exactly the kind of concentrations you see in oil field produced water. At the time, like I said, the process was being tested in 5-liter beakers. We'd mix this sorbent with the produced water, run the chemistry, and could extract the lithium. And so the big question was, does this scale? Can you take this out of the lab? And first step, do it at a little bit larger scale. And we did that in May of 2023, jumped all the way from 5-liter batches to 2,000-liter batches with a successful pilot. And on the back of that, it made sense to commission a full-scale demonstration plant. to do this more regularly. And I can tell you that the oil and gas industry took notice. Soon thereafter, we were receiving samples from every major basin across the U.S., with operators sending us their dirty water and asking if we could extract lithium from it. We did have success with every single sample that was sent in. The process can be tuned. I don't mean to say that we had success on the first try, but this technology is applicable to every sample of oil and gas produced water that we have tested to date. And we've gone through many successions of scaling and iterating on this process. Not only has the efficiency improved and the scale improved, but the economics have also gotten better with each iteration, which is one of the very nice things about having your own proprietary technology. You're in charge of the research and development and the innovation to keep improving with the feedback that you're getting from real world operations. So throughout those successive scale-ups, one of the key moments came in May 2024, when a major midstreamer in the Permian Basin said, "Hey, can you guys take this out of the sandbox that is your demonstration plant and show us that this works in the real world?" So they gave us a couple $1 million strategic investment and invited us to come down and start working at one of their disposal well sites. So by August, we had set up shop with one of the small units you see here for the Gen 3, deployed that in the field and had success. And the partners there said, "Great, that's kind of nice. Can you do this at a little bit larger scale?" We said, "Sure, let's throw on a second tank and start extracting lithium at a slightly larger scale." That would be what you call Gen 4 there. And we went so far as to fully automate that process to show that this was something that was highly scalable and replicable and was not going to require loads of manpower to operate. That also went swimmingly well. And by January of this year, in fact, January 8th, we started commissioning the Gen 5 system, which consists of 4 6,500-gallon tanks to do this process. And by February 12th, just 5 weeks later, we ran over 11,000 barrels of produced water through that in a day, extracting the lithium from it. So we have not only developed this and scaled this in the field rapidly, we've also made improvements every step of the way as we've gone through this. And the intention is to take one more attempt at scaling before year end. However, Gen 5, I would say, is completely scale de-risked. There's no shortage of space. We can match the number of 6,500-gallon tanks to any of the water moving locations in the basins that we've operated in. And we are currently operating in the largest and most productive basin in the United States. So let's take a minute to kind of visualize what this process looks like in the oil and gas field. If you look at the images across the top bar, there are upstreamers, midstreamers, and downstreamers in the oil and gas industry. And the upstreamers would be the well operators. They're the ones who are drilling, completing, and operating wells. They move fluid from subsurface to the surface. And there's a joke in the oil and gas industry is that they don't have any oil wells. They have water wells that produce a little bit of oil. So in the Permian Basin in particular, there's 3.5 to 4 barrels of water for every barrel of oil that get brought to surface. And this is formation water, not just stuff that has been blasted down hole for fracking. This is like a giant underground ocean that is pumping fluid to surface that contains a bit of oil. So the oil and gas operators, the well operators, they separate the oil and gas at the wellhead, and they'll plug into a pipeline at the boundary of their lease, which will transport that wastewater to a disposal facility, which is the third image across the top row. Now, these oil and gas well operators, they can't monetize their petroleum products until this liability that is the wastewater has been properly disposed of. So the water goes through the pipeline to the nearest or most convenient re-injection well or disposal facility. And that's where we set up shop. our technology or our modular setup, our equipment can plug right into the existing saltwater disposal facility. We need to borrow that water. It takes about an hour. We get all the lithium out, and then we just give it right back. And again, in the Permian, there are 20 million barrels of water produced a day in 2024. It's over 22 million barrels per day in 2025, and projected to keep growing 26 million barrels per day by 2030. And this isn't an experiment. This isn't a test. We've been operating in the field for over a year and a half, or over a year at this point. When I submitted these slides, we had not yet announced an update to the number of tests. But we've done over 2,500 tests to date. We have processed over 350,000 barrels in the field in real world operations. This works. We're doing it in the field in Texas. We've done it at very large scale. And we've also demonstrated this to work in the second most productive basin in the United States, which is the Bakken in North Dakota. And a large part of that field study and operations was funded by state grants, where senators and governors have visited and witnessed firsthand how this process works, and further endorsed the project to develop into commercial production. Take a minute and just talk about the scale that is in front of us. I think it's extremely important. The Permian Basin alone is probably the largest known source of lithium in the United States. Again, with all of this water moving, it doesn't need to be at extremely high concentrations, so long as you have the technology that can economically extract from those large volumes. Between the Bakken and the Permian combined, there's over 250,000 tons of lithium carbonate equivalent production potential. And just to give you a sense of where we're located, is right in the heart of water moving country in the Permian. Where our field unit sits today, that disposal location is currently disposing of about 50,000 barrels of water. That would equate to about 500 tons per annum of lithium carbonate production. But if we just go out 2 miles, well, there's 600,000 barrels of water a day. Again, at just separate, decentralized, distributed disposal locations. Go out another 2 miles and you've got 1.7 million barrels of water a day being disposed of right in our backyard. That's 17,000 tons of lithium carbonate production. You know, got to make a big stretch and go out another 4 miles to get to 4.2 million barrels per day. Or to put that in lithium carbonate production terms, that's 42,000 tons, all right in our neighborhood, where we just have to go bolt on some modular equipment that is very inexpensive and very fast to deploy, and we can start fixing domestic lithium production problems. Not only that, we don't just extract the lithium on site. As of earlier this week, we are officially producing lithium carbonate right on site. And we've proved this solution fully end to end, taking the wastewater from the oil and gas industry and turning it into commercial grade lithium carbonate, fully de-risking this project from a technological perspective. We've now shown that this works. I'll pause on this slide for a second and just note that all of the colored pipeline that you see mapped out on the image to the left, that's all for moving water. That's not the oil pipeline or the natural gas pipeline. All of that infrastructure you see there is for moving the wastewater. That's how voluminous the water is in this region. And I'll further point out that this comes with great advantages as a business model. Again, we do not have to lift the water at the well. We do not have to transport the water. This is all these costs are borne by the oil and gas industry that are already moving these copious amounts of water. So we don't have to manage a reservoir. We don't have to maintain that infrastructure. We don't have to spend the energy for moving the water. All of this water movement is already fully permitted. We get to leverage the expertise of the partners that move this water. They're already experts at moving large volumes of water. And again, by just bolting on to the billions and billions of dollars of water moving infrastructure, this greatly reduces our capital expenditure, but also greatly reduces our time to deployment, because we just need to bolt on a little bit extra equipment and start extracting lithium. And I guess I'll spend a minute talking about the last bullet point on this slide. More and more, particularly in the Permian Basin, these water handling operators are moving towards pretreatment and desalination, just to not dispose of all of this water back underground. And we can be a real key value unlock in that process by monetizing this water that they're trying to treat at their own expense to be able to dispose of at surface. I should spend a minute or two talking about the team here. First and foremost, our CEO, president, founder, Alex Wiley, who put this company on his back as of January of this year. He moved to the field site, which is in the middle of the West Texas desert. I'm talking no restaurant or bar within an hour's drive, just out in the middle of the West Texas desert, living in a trailer right next to the operations, making sure that we got this last scale up right. Saw it all the way through from the first piece of equipment being put into the ground through the automation of the process, where this could be controlled remotely and be extracting lithium from this wastewater source, which I'd say we finally achieved that toward the middle of May. Of other note, recently joining the team is Tim Frost, who is the former head of sales for Albemarle, head of 800 million in sales for the Americas and Europe. And we've been working with Tim for a while, and he finally has come on board now. All that to say that this project is real and is ready to go into commercial production. And Tim has those connections and relationships with all of the purchasers across the Americas and Europe to guide us into commercial production, sales, and offtake agreements with the appropriate offtakers. We'll try to race through the lithium market overview. If there are any specific questions about that, perhaps we can get to them in the Q&A. But the fact of the matter is that the U.S. has almost no domestic lithium production, 5,000 tons per year or less, despite having 100,000 tons of demand in 2026 and growing to 500,000 tons by 2030, which is largely associated with the reshoring manufacturing and raw material production. As more things get made in America, there's more demand for these raw material inputs. But there are no other projects that can come online quickly enough to start serving that domestic need, which is a key differentiator for LibertyStream. Again, it's such a short timeline to deployment by bolting on to this mature industry's infrastructure that we can come online and be producing very quickly. The other thing to point out here is that China is a very large choke point in this supply chain. Almost all of the hard rock mining's spodumene or lepidolite gets sent to China for refining and ultimately put into battery cells, which are then distributed around the world. Similarly, for the lithium chloride solutions that would be produced from the solar ponds in South America, those are refined either at site or shipped to China for refining and again integrated into their battery manufacturing supply chain and industry. Here we'll just point out the drastic need for domestic supply in contrast with domestic demand. And we can discuss global supply and demand, but our core focus for right now is solely on the US and the US domestic market. We see there is a real need there with several prospective customers that are very much in need of a domestic supply. Think about if you are supplying something to the US military, you're going to be mandated to source your raw materials domestically as much as possible to mitigate any security risk or supply chain risk with getting military equipment deployed. If your main competitors in your industry are Chinese-based companies, you would very much like to cut the Chinese market out of your supply chain, there is demand for domestic production. And as you can see on the left chart there, that's the production volume of known projects that are planning to come online, whereas the gray line is the actual demand. There is a huge gap, and it's a huge gap that we hope to start filling relatively quickly as we scale out site by site and unit by unit to be producing lithium carbonate in the field. To give you a bit of contrast in terms of the capital expenditure and timeline to deployment with some other known projects or known methods for producing lithium carbonate, I'll point to the capital intensity first. Again, we're not building out infrastructure. For every 1,000 tons of production capacity for us to bring online will cost us roughly $20 million US. And you compare that to $1.5 billion for a centralized DLE facility, or $3 billion for a hard rock mine. And then the timelines on those other projects are 2 to 4 years, whereas we can deploy some equipment in a matter of months and bring on incremental supply as quickly as we can deploy capital and manpower to install the units. And yeah, with that, I guess I can show you a picture here of what some of the other traditional production methodologies looks like. On the right-hand side, you'll see the salars, giant football field size evaporation ponds to concentrate a lithium-bearing solution before going for refining. Open pit mining, where you're digging out ore, collecting the high lithium concentration bits and shipping it to China for refining into battery chemicals or lithium chemicals for batteries, as well as the processing infrastructure. Whereas we can do all of this at a modular scale on a very small footprint in the middle of the desert in already disturbed land that's already permitted for industrial use cases. So with that, I will open it up to questions, and thank you all for your time. If you do email me, do not put 2 ats in the email address. But other than that, let's see if we can get to some questions and see where they take us. Okay. What is the cost of building a new unit in the next site? Are you going to build it in a way that each site serve one customer with its own specialty purity percentage, or can several clients be served by the same unit? Right now, the intention is to have dedicated facilities per customer. Our units will be deployed at the disposal sites. So for example, in the Permian Basin, there are over 1,000 disposal locations. And the throughput in those locations varies. As I said, the disposal well where we're operating now has a throughput of 50,000 barrels per day, or the equivalent of 500 tons per annum of production. The disposal well across the street, quite literally right across the street from our current location, operated by our same existing partner, that has a throughput of 150,000 barrels per day. That would be a 1,500 ton per annum production plant. What we would do is set up the extraction and refining equipment at site, right sized for the volumes that go through it, and we would calibrate the refining unit to produce exactly the spec that a particular customer would want. If you're looking to get a long-term offtake agreement, customers are really going to like a dedicated facility that is producing exactly the spec that they need. It's dedicated to them. They know it's going to be online. They know the product they're going to get. And we would continue that in an iterative process as we step out to more and more disposal sites in the current location. Next question is, in the Permian, you have a refining unit of 10 tons per annum production capacity. Are we planning for a refining unit with much larger capacity in the ETA on timeline? Yes. This unit is not right-sized for our current location. The whole purpose of this current refining unit is to demonstrate the full end-to-end solution. As a venture company, we have been somewhat capital constrained, and we did not want to deploy the capital for a 500 ton per annum refining unit to put on that site before showing it would work fully end to end. The plan, after we deliver some bulk samples or samples to the prospective customers in the pipeline and start signing offtake agreements, would be to right-size the equipment at the existing location, and then next at the location across the street, and at the next one a little further down the road, and match out our production capacity to the offtake contracts that we have signed by that point in time. So first offtake to determine how much we need to build, and then build to suit. And in fact, at that point in time, this 10 ton per annum refining unit will go back to the state of North Dakota, who helped fund the purchase of this, as they are quite bullish on the prospects of our business and being able to make them a battery manufacturing hub in the state of North Dakota with the Bakken produced waters. Okay. How long will it take you to build a new DLE unit on the next SWD? Realistically, including lead times, you're looking at 4 to 6 months. Okay. What is the cost differentiator between your process and traditional lithium processing? Well, at present, we're in the bottom third of the cost curve, and we will not stop innovating and working on ways to get that even lower. We do have a rather big advantage over many other comparable operators, just because, again, we don't have to pay to lift the fluid or transport it. In reality, we are a flea on the back of the dog that is the oil and gas industry, that is generating billions of dollars in revenue every couple of days. What is your path to long-term success? A technology and licensing platform and an owner-operator of units tied to midstream partners, or a scale to a larger strategic? Some of those things are still up in the air, but I would say that our path to success is all about execution at this point. We've demonstrated that this process works end to end, going from wastewater to lithium carbonate. And now we have to go out and execute it, deploying more and more units, taking on more and more partners. And what those relationships look like will come to light in the coming months, now that this process has been fully validated end to end. Guys, thank you so much. There's so many questions. I'm going to try to scroll and see which ones might be best to answer here. What is your time frame for finalizing off-taker contract agreements? Well, that's out of our hands. What I can tell you is we're hoping to generate some positive tension in our favor, given the number of prospective customers that are in our pipeline, and given that many of them are motivated to have domestic supply for one reason or another. But ultimately, what we can control is producing product, consistent product, and delivering them samples consistently to the point where they're comfortable knowing that we are producing a product that meets their spec, and ultimately signing an offtake agreement to get either all or some portion of their needs met by our production. And I guess we have time. Let me try to answer one more here before I get flagged to sign off and run out of time. Can you explain what differentiates LibertyStream from other large DLE players like Standard or Exxon or many of the other names that you've heard in this space? And yeah, I think this is somewhat of a misconception, and bunching us together with some of these other operators, which, by the way, we need all of these operators. If you guys saw the slide with the gap between domestic supply and domestic demand, we need all of our peers in this space to come online successfully. But the real key differentiator here between, for example, us and Standard Lithium is most other direct lithium extraction operators are pumping fluid to surface for the sole purpose of mineral extraction. It is not a byproduct of another industry. So they will have to drill wells, they will have to run pipelines, and so on. And we've heard a lot about the oil and gas industry majors stepping into the DLE space. But what I can tell you, at least in the public-facing information, it is not as a technology operator, and it is not for extracting lithium from the oil and gas produced water. What they are doing is they are partnering with the companies that have the mineral rights to these high concentration lithium brines. And they're looking to leverage their expertise and core competency in drilling and completing wells, managing the reservoir, and lifting fluid to surface to then pass off to a technology operator. I do not know of Exxon or Chevron or any other major actually working on a technology to extract from the lower concentration feedstock that is the oil and gas wastewater. And yeah, with that, I think we have to wrap it up. I'm just out of time. So thank you all so much. The questions that have been submitted here that we did not get to, I will try to get to in good time and send you guys a message should I have your contact information.